Hello, welcome everybody to another episode of Arthur's Roundtable. Thanks for being with us today, and also big shout out to the Family Office Insights community and people who have subscribed to the Arthur's Roundtable podcast. Super grateful you're sharing and participating, and really appreciate it. So thank you for that. We have a guest, Oz, today, and we're super anxious to hear about what his business is all about. And Oz, if you could start with the beginning of your journey, that would be awesome.
Sure, Arthur. First of all, thanks for having me.
You're welcome.
So I come from an immigrant family. So I came to the United States when I was 17 years old. My father had been here prior to us, so we were expecting like a nice, financial cushion, come here, go to school, but it couldn't have been different. So when we arrived here with my sister and my mom, I didn't speak a word of English. My English is still not amazing, but back then it was non-existent. So we found out that my father's small business was like a failing business, and he was kind of dabbling to try to figure out. And 6 months into our arrival, he had to file for bankruptcy, right? And that, as you can imagine, caused a lot of havoc and chaos and also trauma for someone who's like 17, 18 years old. And my younger sister was like 14. We were just trying to get jobs and work and pay off debt and taxes and all of that. So that took us about 6 years to kind of break even, because between trying to figure out, well, how the U.S. system works now to get a job and at the same time go to school and things like that. But through that time, one thing that stayed with me, that bugging question is, why did this happen, right? So, which led me to get into the financial services industry. I'll tell you a little bit about my backstory, if you don't mind. Because I was trying to
Please.
understand.
What country, by the way?
I'm originally from Turkey.
Oh, yeah. Took a share of datum.
Yeah. So, what's that?
I was trying to speak Turkish to you.
Oh, yeah. Yeah, I heard. Yeah.
Yeah,
You're welcome. I think it's just a thank you.
yeah.
Yeah, so that question kept bugging me, like, why did this happen? Why did this happen? I just didn't know. Then I noticed that, well, I will not find out about like why, although he was great at his skill set, his trade, he didn't understand the finances, money, and the whole thing could have been avoided if he had access to maybe a business line of credit or like a mentor and stuff like that. So that put me through my college years. Oddly enough, I did a double major in biology and chemistry, had nothing to do with finances, but graduated with a degree. And I had the option to go to medical school. I was a pre-med, but I found out that medical school costs a lot of money, which I didn't have at the time. So I got a sales job, like most people do, selling door to door and various things from like POS systems to credit card processing. So I was kind of tiptoeing into the finances and how money works, which gave me a lot of exposure to get to know like wealthy people who own businesses. They're doing really well. And you and I were chatting about our background in New York, right? So going into New York, you can see people who are homeless. You can also see billionaires who are making so much. There's no
On the
sky,
same
right?
sidewalk, right?
On the same sidewalk, taking sometimes the same subway, right?
Yeah.
And then that was like a big eye opener for me to understand. But I still didn't really understand how finances or financial literacy works. Until I was networking with a sales guy who was in the loan business, selling loans to small businesses. And then he told me how the whole thing works. And to be quite honest, it just went over my head. I didn't understand what he was talking about. I said, all right, what does that mean for me? And he said, well, Oz, you have contacts within the restaurant industry. That's what my niche was. I was helping them get set up with those, touchscreen POS systems. When you go to a bar, they take your card.
It's a nice business. Yeah.
Yeah, it was. Yeah, I used to work for NCR, one of the biggest providers. Like they're one of the biggest builders of the ATM systems as well. So nice corporate job, and I started to make some money being in the New York office, nice fancy office, and things like that. And he said that they're the ones who need the most amount of capital. What I didn't know back then was the restaurants are in really thin margins for the most part, so they operate sometimes off of debt, and it made sense because I was trying to get 25, 30K out of them for these systems. Like when you're setting up 5, 6 of these at a bar, each of them cost $3,000 to $5,000 back then, right? So probably right now there are other options. So it made sense. So we built like a affiliate relationship. I used to give them like referral leads from restaurant owners who need capital. And in return, once they have the money, the plan was for them to give it to me so I can offer my services.
Yep.
Great partnership. But on my fourth referral to him, I found out that he actually funded the customer, and then he gave me a call to meet up again, and he handed me an envelope with a check with my name on it. It was $4,000. So that was the biggest amount of commission I made until that point from just one transaction that I wasn't even involved in, because my sales process usually would take 2, 3 calls, take the units, carry them. They're all like each 10 pounds to the restaurant, to showcase, to demo, and all of that, right? And this guy gives me a check for like 4,000. I'm like, what could have possibly happened in that meeting of yours that you got them the money and my cut is 4,000? Like just the math just was not mathing.
Right.
And obviously, like any person with average intelligence would do, I dug into it. I'm like, what is going on? I'm closest to money now. And it opened up so many doors. And I switched careers to become a business loan broker. And when I did this, there were not a whole lot of funding options for them, right? We only had like term loans and merchant cash advance and things like that. But then as being a curious person, I was very tired of finding customers through telemarketing and cold calling. Like I was calling 600 people a day out of the office, basically 3 days of the week. The other 2 days, it would be just pulling on doors or attending my appointments. You know, New York, summers are hot, winters are cold. So it's not the best thing you can do for your body and for your mind. I was getting pretty burnt out, and I wanted to learn how to do it through marketing, which I knew nothing about. So I invested in a bunch of courses and mentors and things like that. And I figured there's like a big gap in the alternative lending industry. All of these big guys in the lending space had this like boiler room, Wolf of Wall Street vibe, like a office full of dudes dialing and smiling and dialing type of
Yeah,
thing,
right.
right? And I became the marketing guy. I told them, hey, you don't need all these people. We can actually send an email to your list, so we can do paid advertising and get you in front of like higher quality leads. That started the agency part of the brokerage. Like I was becoming a marketing agency specifically for anyone doing loans, right? Which took off. We were doing fine. A main problem was the problem that I didn't anticipate: the business owners not wanting to do marketing. They wanted their guys and girls to keep dialing, right? So they were kind of using old school systems. And then I kept talking about, I started shooting YouTube videos at this point, talking about how like my process is more efficient. Like even sending a million cold emails is better than having, 50 guys call in the office.
Why do
But
you
it started,
think, Oz? Why do you think
yeah.
that they wanted to do it old school?
I don't think they understood how it worked because it required a different funnel, right? So their existing funnel was like, I go to Arthur. Arthur is the data guy. I can buy a million records from him for like 50 cents each, give it to my guys. They have a script and they smile and dial, and the transaction happens. My process required for them to update their website, have an opt-in funnel, paid advertising or organic or lead generation, and someone would need to open those leads, meaning call and qualify, hand it off. So it required a big change in their mind, which would have been much, much cheaper. But it was like this ridiculous resistance back and forth when we were having discussions. I remember one of my best customers who stayed with us for like 2 years, and they were paying like us a hefty amount of money. And then I used to go to their offices in Wall Street area every 3 months to check in. And, I logged into their Salesforce. I'm seeing these hundreds of leads who we drove from paid advertising. No one even called them.
Hmm.
I was like, Jeff, what's going on here? Like these leads are sitting here and you guys didn't even call. Then I found out the sales manager was afraid to call them because he thought he would lose his job because he's used to calling. So I identified that gap. Then he got pissed that the sales manager. I found myself in the middle of like a corporate drama, basically,
Right.
right? It was resistance to the change. But as I became more vocal about it, I started attracting people who wanted to get into the industry, not the people who were already in the industry. Again, which happened coincidentally. I was just voicing my concern. I remember, I think this goes back to like 2018, one video that I'm quite aggravated on comparing the models, like how this model, you can still keep it, but without doing online marketing, you're going to suffer. The cost per lead will go up. You're going to need to hire employees that you pay a base of 50K in New York City standards and the comp plan. And then all of a sudden it started attracting people who are like, you know what? I'm in sales. I'm selling solar. I'm selling mortgages. This will be a good fit for me, like alternative lending. And then they started asking for training. Now I've done both marketing, sales, and the loan brokerage. We started like a training organization, and then it started to grow. So fast forward to today, that became our current company, Business Lending Blueprint. And we have 7,000 business loan brokers. Most of them didn't come from the industry, from different professions, basically. So we trained them, we set them up with our existing lender network, and now we have access to over a dozen different products, from SBAs to equipment financing to working capital, the business lines of credits, commercial real estate, and things like that. So it became a company that takes ordinary but ambitious individuals, turn them into business loan brokers, basically they're selling money, right? In my opinion, the sexiest product to sell. And then we provide the lender back end with our technology platform, so they know how to place it, where to place it, and how to get paid through that. So it's kind of my origin story, if you call it, like how we ended up here today. And today we still onboard a lot of new brokers, ambitious people. They see us on our ads and social media presence. So that's what we've been doing in a nutshell.
Yeah, super helpful. Appreciate that. Is at one time, and if you don't mind sharing, if it's still the case, there's lots of money around for people that want to lend it under the right
Mhm.
terms. And there was at one time often a gap between the people that had the money and the loan origination, and that gap was often filled by people that just set up businesses like yours to do the
Mhm.
origination,
Mhm.
not not just have the access to the conduit to the money, but the people who had the money didn't want to go find the people to lend it to. Is that still the case?
100%, you nailed it. So, as you probably know, money is never the problem. These lenders have more money than they know what to do with. They want to monetize it, they want to deploy it, right? But the problem is they don't want to have a lot of salespeople selling, and they certainly don't want to become a training company, right? So they're not set up that way. They just have money. They want good files to come to them. That's the gap that we're closing. We early on identify that, right? So these lenders, because they always bug me. I'm like, you take a huge lender, right? I'm like, why would they want to have our students? They can just go ahead and do marketing and do training platforms, but they're not designed to do that. They don't want to do that, right? So they rather have someone else handle that issue. So they deal with the underwriting and someone sending the leads, and they qualify and fund the leads. That's exactly what the issue has been in the industry. It's just there are enough lenders and enough money. They just want to find the right businesses, and they don't want to set up a marketing, sales, and training company.
Is it? I'm not asking you to reveal any secret sauce or anything, but there's if you had 1,000 good leads, do you end up with 100 fundable loans? How's that? What do the numbers look like? Because the
It
people
has
with the money, they also want good loans. They don't want to just deploy. They want to get paid back, right?
Absolutely, yeah. If you understand their funding box, like what the kind of deals they fund, the approval rates are super high. Like it can be 85 to 90%. A lot of times when you take a bucket of like 1,000 leads, that's the quality issue, right? For example, we have a funding offer that's 0% financing, it's like a credit card stacking for startups, no revenue companies, right? But they're practically the most important requirement is the applicant needs to be it needs to have a 600 credit score and above, and they need to have the credit depth, not just the score, right? And then, when you don't know that and you're sending startup funding lead, and most of them are like 580 credit, 540 credit, or they don't have anything on their credit report, that ends up creating that problem. Wow, we have so many leads, but none of them is funding. But that's where it becomes a training issue, right, from the broker end. So before you submit the file, how do you know that it is a fundable deal? That's the important part. And how we solve this problem is we recently launched AI generated pre underwriting systems. So before we even match it with the lender, we ask some questions to the broker, or they can upload documents in our system, and AI analyzes it and says, based on the file that you're sending, either A, maybe it's not fundable, or B, you have four different options. So you can go back to your customer, Arthur, and says, Arthur, what do you want? Do you need the money like yesterday? Or this is for like an expansion project? Or you have the money, but you want to have a business line of credit for like bad days or something like that, right? Or is it more like a long term? You want the cheapest money, maybe through an SBA, and you have time for, or you're willing to provide a documentation like tax returns and things like that, right? So it leverages brokers' time to work on the better leads, and return the lenders are happy because we're pre-vetting them basically. And then if you're a brand new broker and trying to figure this out all yourself, well, first of all, you need to Google who the lenders are. And most lenders are not going to accept you because if you don't have any history of lending, or like some of them, for example, on deck, they require that you do about $1 million in lending per month. Most newer people or smaller shops, they don't do that kind of volume. They're cut out from all these options, and most of the time they don't even know what they don't know, right? So, but when you have the options and you have a way of qualifying leads, then funding doesn't really become a problem. Then the secondary problem, which you didn't ask, but I'll explain if you don't mind, is when you have an offer on the table, you need someone who can sell that offer, right? So just because you generated the lead, the person who can generate the lead might not be the best person to sell it because it requires a different skill set. So that's why we also have the back end sales team. If the broker wants us to close the deals, we do it. We minus it from their commission, but that's the whole purpose of the training. You can be like a lead aggregator or generator and just send leads and forget it. Or if you want to be a full-fledged, 360 business loan broker, you want to fund and also there are syndication options. Like as you make more money, you can pitch into the deals with your own money and grow that too. So we give all those options to our members so they decide what is a good fit for them. Some of them are operators, never sold anything, and they don't want to be a closer. We just tell them, hey, you either hire people or you learn how to generate leads and we do the rest. Does that answer your question?
Yeah, totally. And then some. Is there a way to pre-qualify the leads? Like before with AI, for example, with everything that's going on there and how fast it's moving, so you can actually focus on leads that are likely to get funded?
Yeah. For example, if you're doing paid advertising, right, you're getting leads through Facebook ads. What you could do is you spend, let's say, $500. You can start with as low as like $10 a day. But let's say you spend $500 and you get 100 leads. Depending on the quality of the leads, you can feed that info back to Facebook's AI and tell we want more of people like Arthur. Let's say less of people like Oz, right? And then it changes the targeting. It's AI based targeting. And when you do receive the leads, that they can also run it through our AI system to see how how good the lead is, right? So you can start having a conversation with your lead, asking certain questions. So we're trying to simplify that back and forth communication that could over disqualify someone. That's usually what happens with newer brokers. They go through a file, they're like, nah, this guy wouldn't get the funding, right? Without even having an opportunity. Or they just don't know how to disqualify or qualify someone. But yeah, there's so many different ways. I don't want to get into the technical ways of doing it, but if you're a paid ads guy or girl, you want to scale it, what you want to do is you're not just thankful that you got leads, because you can get funding leads for like $3-4 per pop, like someone filling out a funding form. What you want is the person who's actually looking for funding and they're ready to take action on it and they qualify for something, right? So we look for the cost per quality lead, not cost per form fill outs, right? And they can go up to $20 to $30, sometimes $50 per lead. But usually the return on ad spend is 5 to 6 times if you set it up properly, which, as you can imagine, requires some level of training for the operator to know what the heck it is that we're even talking about here.
There's a lot of talk about people being eliminated from jobs because of AI.
Uh-huh.
Is it your view that you still need somebody to get on the phone to talk to these people, that because they're not going to agree to terms, or if I imagine there's a fair amount of people that would take loans that without human interaction just because it was easy and they'd like to see the money in their account, but that's not really who you're looking for, right?
No, we're dealing with small business funding. Like if this is like institutional funding and things like that, I can see that happening. People understand they have a board already, they have an accounting team, they can evaluate the deal and decide if it's a good fit without talking to anyone. When you're talking to a restaurant owner, that person probably heard about AI and they're working on it, but they're not at a level to evaluate a deal and make a decision because their motivation to get the money is usually speed. Like they need the money. Think about an
To
emergency. The
pay the
fridge
staff,
breaks.
right?
Yeah, exactly. Pay the staff, expand, I don't know, like a safety net and things like that. That's where the human element comes in. Where I see it's going is AI augmentation, meaning what we're doing, right? Give the brokers the tools of the AI basically, so they can help their customers a lot better. I don't see that's changing for the small businesses, but if the target audience were totally changed, if you're targeting a bunch of technology companies and they need seed funding and things like that, that's different. But for our audience, which is 70% of the U.S. economy, basically small businesses, they're not there to just take loans right and left without understanding how it's going to work, the payback terms. What is even a better option? If you were offering one product, Arthur, that would make sense, like Rocket Mortgage, right? You're getting a mortgage. But now the distinguish between, well, do you want an SBA versus an equipment leasing? It's going to be very difficult for a merchant to go through the options and understand what is a good fit for them and accept the terms and be okay with it.
Are the lenders, things have trends, right? Are the lenders who are well funded now have a good appetite for no personal guarantees, that sort of thing for businesses? Is that still something?
It is still something. Most of them will, depending on the funding type, right? So for certain funding options, they will require personal guarantee. One of the things we're doing is educating merchants on building their business credit, so they're not just relying on their personal credit. Because if you're personally signing the dotted line with Arthur's credit score, you're personally guaranteeing it. But if your business has its own credit score, like business credit score, that's basically what it is, treating as like an entity, then not only further funding options open up, and you have the options of putting it under strictly under the business versus your own finances, right? So they're totally open to it. But the problem is that that's why we're big on training the small businesses. Most businesses don't even know such a thing exists, such as building business credit, which is not necessarily a complicated thing, but it's just the awareness level is not there. They kind of hear things, but they don't pay attention. It is strictly an awareness and education problem. But once they understand and they want to unlock like larger funding amounts, large in our universe is anything over 250K and above. Like in your universe, it could be different, but in ours, that's the amount. And we tell them, hey, if this is an emergency, we'll take care of it. But we highly advise you to take these steps. So on the next round of funding, you can get better options, the cheaper options with longer terms and things like that. And here's why we might not be able to do it at the current situation that you're in.
Is SBLIC, if I'm saying it right, still a good option for people who can provide the right documentation and take some time? And is it still active lending from the government source?
Oh yeah, I mean they have multiple programs right now. They even have their own portal, which you can evaluate different options. Um, but the caveat is that it requires tax return, a certain time in business, and certain credit score. The story of your business, what you're going to do with the funds, and things like that. That's why we have advisors. You can do it on your own, obviously, but you need someone to decipher what the government wants. Just like anything government does, it's kind of complicated. It looks cumbersome, and for a small business to understand all of that and comply, we have experts who get you funding ready, basically tell you why we need it and what they mean when they say this in article 4.5, and how do we get that information, who's the CPA. So there's a coordination effort that happens. So we start that process. If someone is adamant about, let's say they want to get like $2 million, right, we're like, fine, we can work on this if you're willing to go on a journey with us. However, you're also telling us that you need like 150K tomorrow. Which one is more urgent? Like we can set that up and work on the SBA, or we can just work on the SBA, but we'll need this, right? So we have that flexibility at least to provide them like faster capital while working on a better deal, because obviously everyone wants those type of deals with like 10-year term and lower interest rates and things like that. But that requires a lot more due diligence from those government backed loans.
So there's an old saying that says you should apply for a loan when you don't need it because when you do, you can't get it. Right. So, and I know there's terms that will probably mitigate some of that, but what's the sentiment now? Is there lots of money available, even if it's usury rates or hard money lending, whatever you want to call it?
Oh, absolutely. Yeah, that's why you're saying it's perfectly fine. So you want to get money when you don't need it. Can you get it when you do need it? Yes, but at a cost. It's going to be expensive because a lot of those funding options are not collateralized, meaning the lender is counting on you paying it back based on how your business is doing today, and they're going to charge prime for it, right? That's why I'm a big supporter of business line of credits. Like, yeah, I don't need money right now. Yeah, but 6 months from now, if you do need it, if you end up in a situation knowing the failure rate of the businesses, it's going to be more expensive. And you might better get approved now while things are going well. Let it sit there because you can get an approval 250,000, 500,000, a million. You only charge when you draw on it, right? And small businesses are interesting in the sense that they're entrepreneurs. So when there is money available, they always like find opportunities to invest into it, buy a better equipment, expand your existing location, buy out your competitor, move into a bigger office, hire better talent, and things like that. So the appetite is definitely there. Like we're funding all kinds of deals from like merchant cash advance to terms loans to business line of credit. But I'm big on advising the business, which increases the lead pool, right? If the business now Oz thinks I don't need money, but a consultant says I understand it, but do you have any resources when you do need the money? If you have a bank account with a lot of cash, that's fine. Maybe you don't need it, but if you're on thin margins, like most businesses are, some catastrophe hits, what are you going to do about it? And you and I talked about COVID, and it could be all kinds of crazy stuff, right? So that
Yeah, the
whole New
heater,
York City was shut
the
down.
heater, and the exhaust system in a restaurant. Anything that's a big
Anything,
capital expense could go wrong, right?
right?
Yeah,
In a business, anything that I think it follows the Murphy's law. Anything that could go wrong will go wrong at some point, and usually when it does go wrong, multiple things will go wrong at the same time too. That's just how it is. Like you're playing the odds of succeeding in a business. There's just so many moving parts, and you don't want to you know, I guess let go of something you love to do because you just don't have the money, which is the saddest way of like go. I know because that's what my father had to do. He loved the profession. He just couldn't keep it anymore because he just ran out of money. Just couldn't handle the finances.
yeah. Is there a type of business that you like to lend to because they need time of the essence money and the fees are good, but they will pay it back? Is there like a sweet spot right now that you like?
Well, we have a grading system for types of files that we want. Like you have A type of lender, B, C, D type of paper, right? So you look at the paper. A lot of the papers that we like to have, the high transactional industries, like there's multiple transactions. For example, there might be a construction company, they might be doing 10 million a year, but the average customer pays 2 million. That's like 5 transactions a year. As you can imagine, that puts the lender at a great risk because any one of them failing could be the whole profit margin of the business.
Right.
Whereas a consulting company, they charge $150 an hour, but they do have thousands of customers. It makes it so easy to
Spread the
lend.
risk.
Exactly. So that we love industries like that, but we fund all kinds of odd industries as well. Recently, one of our members funded a jet, someone buying a plane for the company, and they had the right story and whatnot. So there are a lot of, and we found a lot of equipments. Some of the equipments I don't even know what they do. Like I see the pictures, I'm like, cool. I wouldn't know what that does, but
Right.
hey, someone needed it. Um, but from an ease of funding perspective, like the funding time goes from like 24 to 48 hours to a couple of weeks, right? So we found all kinds of businesses, but when we look at a file, it's a lot easier to underwrite and feel confident to see volume coming from multiple customers, not just a couple of basically a key customer risk, right? If the business has a key customer risk, that's kind of dangerous. It comes with a premium, unfortunately.
Yeah. Uh, there's a lot of talk now in large scale private credit funds. I mean, just I don't have to name any names, but there was a lot of private credit, in in different sizes than what you're talking about. 10 million, 20, 30 million
Sure.
dollar loans, and some of the biggest lenders that we all know and love have put gates up because there's no liquidity in the funds. And
Mhm.
so people who are getting a little spooked on private credit have been subject to a gate where they can't get any liquidity. Are you involved in, for example, there are people who have illiquid founder shares in companies that are hard to value, but it's likely to go public? Do you fund any of those type of things?
We do. Our process follows the classic 80/20 rule. 80% of the deals will be like small businesses funding anywhere from like 10,000 to 2, 3 million. But we have partners who fund crazy deals too. Like one of our partners recently, they're in the process of funding a hotel being built in Dubai. I don't know how that's going to go right now, but overseas projects and things like that. So the project is itself is not liquid yet. It's like a startup, but the investor has the experience. They look at different factors. So those fundings could be in hundreds of millions of dollars, right? Some of them are through family offices that you're familiar with. So I see a little bit of appetite developed by those large funding companies to get into alternative lending. I honestly do not know the reason. There's definitely, we always had the demand for those type of deals, but I'm seeing like more and more people reaching out saying, "Hey, we can fund these deals. We can provide 10 million, 50 million, 100 million. These are the conditions." And I'm like, cool. Like we have a large enough community that we're going to have the lead pool for those type of deals as long as you guys are willing to fund them. So it is happening more than I've seen in the past, and I've been in this industry for a little over 10 years at this point.
Yeah, that's good to know. There's I being that I was in New York City for a long time, I got to know a lot of loan to own brokers,
Uh huh.
people that were basically hoping that you default because the covenants were so strong and they would
Yeah.
just take over an asset. And I'm not passing any judgment on that, but are you seeing that activity increase of late, or is it pretty much the same as it's always been?
It has decreased because some of the states added some additional regulations to watch out for players like that because it wiped out some of the bad players. I mean, again, I don't want to just make a blanket statement. I'm not saying all of them were bad, but like as you witnessed yourself, some of them kind of got into the habit of counting on that
Yeah.
and funding businesses that were not fundable, and they were counting on them, and then that became that can start tainting the name of the industry, alternative lending, right? So I'm not I'm not a fan of too much regulation, but a little bit of regulation is not a bad thing, I believe, when you have billions of dollars exchanging hands, and some people will figure out a gap in the game and try to utilize it. So we're seeing states like California, New York, and Utah is one of them. They're setting up kind of some level of check on that one. I think that worked out better for the industry. This has happened over the past 2 to 3 years.
Yeah, there's always bad guys.
Of
No matter what,
course.
there's bad guys in everything. What about the banks? I mean, there's so much talk about how banks have been reluctant to lend, and the banks blame the regulators, and the regulators blame the banks. Meanwhile, we got businesses that are suffering that can't get bank lending at reasonable rates. Is there any trends going on there?
Banks are interesting because they're like you said, adamant about adding restrictions to funding to small businesses because they're publicly owned and they have a balance sheet and all that stuff, right? But they kind of got around the game is instead of providing direct funding to small businesses, they prefer to provide funding to the alternative lenders. So reduces their risk. So instead of underwriting a small Joe's, a pub, they underwrite Oz Konar, the funding system, and they say Wells Fargo can say I can give you $10 million because they can assess the risk because of how we operate and things like that. It's an example, right? And then they are still heavily involved in the alternative lending industry, but not the way people think. So the complaint is fair, like they're not funding, and I understand, and no one is a fan of their banks. Their favorability has been going down drastically, right? And it's some of that is of their own doing. But they also it's equally not true that they're not involved. They're highly involved, but they're involved with different players to still provide funding to small businesses.
Did you see any increase in your business? For example, when SVP, Silicon Valley Bank, went under, did that affect your business at all in a positive way?
Well, alternative lending has been growing like triple digits. So it's been growing massively. What has happened is I've been doing webinars for the past 6 years, meaning people who are interested in becoming a business loan broker or people who are in our community already. One thing I noticed is that when I used to do webinars 6 years ago, I would always ask the question, what do you guys think about your banks, right? I guess the narrative, the rhetoric towards the banks have changed in a negative way drastically over the years, right? So you used to have people saying, oh, I know Arthur from my branch. He's a nice guy. He takes care of me too. Banks are evil. I hate my bank. They only take, they don't give back. They're having a major branding issue, honestly, right? So there's like people are, it's like a utility thing. I have to use it, but I don't like it at all. They didn't fund my uncle. He went out of business. The whole funding thing, it seems like they feel is this unfair equation of banks want your money, but they never want to give it back to you. And they're coming up with excuses not to do it, right? And it's partially right, but the other thing is a whole branding issue that they have, right? So I think if they were to show that they're involved and they're doing some things, but I don't know how easy it is to fix it. People who are a little older also remember how like the banks caused the whole 2008 thing, and at the end they got bailed out. with tax money, right? So then those kind of scars live longer than I guess banks imagine, and then banks going down because they bought other stuff with people's assets, and those assets depreciated and they just disappeared, right? And like kind of nothing happened. Uh, so I think anyone above like 30, age 30 and 40, their feeling against the banks is like pretty negative.
Yeah.
Does it help alternative lending? What it has happened over the years is alternative lending were really truly seen like alternative, like the oddball. Everyone was associating our industry with like, oh, hard money lending, super expensive. Now that narrative has changed quite a bit. Oh, I have options. I don't have to go through my bank. I think it was like a learning thing, which was true in the past. When I first started out, like term loans and MCA were pretty much the only things. Now there are like so many different products, and us alone, we selectively allow 12 products, but collectively there are so many other products. So we're having a positive brand experience with alternative lending, and banks are doing this the negative one.
So, I'm not asking you to prognosticate, but do you see signs of 2008 in the willingness for people to lend against no doc loans and that sort of thing?
I don't think so. I don't see signs of that, honestly.
Good.
I think the demand for capital will grow even more at the times of uncertainty, right? So U.S. has a debt issue, as you know, right? And also there's a war going on. It seems like, and U.S. is not foreign to seeing wars. U.S. is always involved in some kind of conflict. But and also there is the on the positive side the growth of AI, which is going to allow millions of people to start AI based businesses. So I think the demand for funding will keep going up. I don't see it getting less and less, because until the banks figure out how to fund a small business using AI technology, alternative lending industry already figured it out, because it's small enough to navigate, whereas the banks is like navigating an aircraft carrier. Even if you make the decision, it might take a couple of months for you to come to terms with how are you going to fund something. So the demand will go up, but do I see, unless U.S. totally fails on its debt obligations, but it's the government level thing if that happens. But I don't see the underlying reasons that we had during 2008, which was like people losing their homes basically. So right now, if anything, there's a shortage of homes. Yeah, the people who default on their payments have been going up too, but so is the growth on the economy because of the AI related stuff. Those are big corporations. So at least I'm not an expert, but on my end, it is a tough read to conclusively say that, oh shoot, this is going to be bad. Like it's like, yeah, we might have some tough spots, but we're still US still has the leading companies and technology, and they're popping up right and left. Like the amount of deals that we see, businesses being started with really, really unique ideas, gives me hope for sure, and for the growth of the alternative lending industry.
Yeah, from my perspective, just if you don't mind me saying,
Please.
you know, business is good. People are executing. People are excited about becoming entrepreneurs. There's lots of great sentiment. There's lots of money around.
Sure.
People are investing and deploying capital. Stock market's up. So the signs are good. It's not good that we're in a war, but we'll see what that turns out to be. There's always something. There's always some sort of conflict, as you say.
Well, when you're the massive force in the world, right? So you're going to have to get involved with conflict. Again, I'm not defending or
Yeah.
nothing like that, but it is what it is, right? Unfortunately, we don't want people to die and we don't want any wars to happen. But it is a very naive thought that that would happen when you try to run the entire world and you're the dominant power and there are other players who want to just kind of topple you.
Yeah.
That's just, but how much of that stops business growth? And like you said, we have really, really innovative people. People are really working hard. They're demanding capital. I think a lot of the negative sentiment and narrative comes from partially the crypto industry, right? So because those people were influencers, so they had a lot to say on social media to start with. Whereas a stock investor, a lot of those people are not public. Like you
Right.
probably know some people. I know some people with amazing net worth. They don't even have one tweet.
Yeah.
But whereas the crypto guys and girls, when things are good, it looks like it's going to take over the U.S. economy. When things go down, U.S. economy is going to collapse. I just want people to be cautious where they're getting their advice from. Like, be very careful how long that person has been in the game to be able to read the full economy. U.S. is massive, but 2008 was something bad. Like it was like a true definition of bubble, and I don't see signs of that personally, honestly.
I agree, and I'm long crypto, so I'll disclose that. I'm paying attention, like the asset class in a certain level. not knee deep like a lot of other people are. But I will tell you, the last thing I want to do is go to a crypto luncheon and
Yes.
listen to a bunch of crypto bros talk about crypto. I mean, that could drive anybody insane, right?
Absolutely. I don't go to any. I have crypto. Just full disclosure, and
Yeah,
yeah, I lost some money. I won some money here and there too. But
yeah,
you got to be very very careful on new technology stuff. I still have strong belief in the small business economy and the entrepreneurship, the drive that U.S. has that I don't think any other country has. Like we have that resiliency and entrepreneurship drive, and the people with skills to basically adapt to the changing environment. You know.
totally agree. What's the profile of a good candidate for your business that wants to get into the lending business?
We put it in two buckets: startups and existing small businesses, right? So I read a research a while ago. I'm paraphrasing, but it said that 70% of the US adults at some point thought about starting a business, and what stopped them was the initial capital. Whether you're buying a food truck or renting a place, leasing, or investing into a franchise, that's a big market for us, and it's a very credit driven market, right? So we're able to provide someone anywhere from like 40, 50,000 to 200,000. Unlike Silicon Valley, small businesses need kind of that much, right? So it's rare for a business to need like $3 million to start. It's like usually small things for them to get started. That's a big market, startup market, and it's based off of pre-revenue, somebody's personal credit. And let's say they don't have the credit, we have credit repair and credit monitoring services. If they're willing to cooperate and they're open to us helping them, we can get them to that level and provide the funding. The second bucket is the true small business, right? Anyone generating 5,000 a month all the way up to 2, 3, 5, 10 million a month, and that is a lot of times based on the time in business, and the monthly revenue. So as long as they're in business for as low as like 2 months and they're generating some kind of revenue, we're willing to take a look at it. So if you look at those two buckets, those are the biggest one. Like small business, you're talking about 30 to 35 million small businesses, and about 700 to 1,000 of them being formed every single day in US. Those
It's
are like two big
wild.
buckets for us.
Yeah,
That's a wild number. Yeah.
yeah, and it's really encouraging. Like, it's a great time to be alive, for sure.
Oh, for sure. Yeah.
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 Are you doing any lending? So that's a good description of the profile of the people that you lend money to. What about the people that want to get into business with you and help those businesses?
We have great lenders. So we usually, unless the person or the company is from the industry, because we're an alternative lending. Some of the stuff investment applies to, standard lending or venture capital lending doesn't apply to us, right? There's a certain element of risk, and the person needs to understand that. So we usually keep it within our community. So some of the deals that we fund through small businesses personally come from my own funding, because that's the path that we show to our brokers. So you can start and if you want to make some side income or grow this and make real income, or get to a point of investing into the US small businesses, which is what I'm doing. Like, yeah, we have the training, we have the funding, but a lot of the deals that we fund, we syndicate a portion of that from our own capital, deploy the capital, right? So we have members who reach that level, so they earn more than they need, and they're looking for an investment path, and they usually come to me and tell me, hey, Oz, do I buy a house or do I invest in crypto and things like that? I tell them, hey, this is not financial advice. Obviously, you can do whatever you want. What I'm doing is I'm putting back into the industry that I've been in for 10 years, because I would say I'm pretty knowledgeable on what we're doing here. So that's how we operate the lending part of that. Otherwise, the lenders usually, unless they need like a lot of capital, they can get it from the banks for like a cheaper, or venture capital firms for a cheaper interest rate, because they can calculate how much they would make by deploying that capital in return. They keep the difference basically, right? But we're actively involved on the coaching, qualifying, training, and also funding those deals, collectively as Business Lending Blueprint.
So what's the process like if someone wanted to first augment their income by learning about being a business, a loan broker, and then ones that see it's succeeding or want to get all in? What's that process look like?
Well, we want them to understand the entire aspect of business loan brokerage, right? So people usually start what you call them refer and earn. They start by sending leads and we close it, and they see the potential. They're like, oh, cool, this is really good. They want to understand how the underwriting works and how the funding process works, like how to close the deals. And they go through that process either on their own or they hire talent to grow it, right? Then we tell them, hey, you're funding, let's say 20 deals a month, and you're making money, obviously. With this, why don't you fund some of these deals, like a percentage of these deals from your earnings? So for let's say 50%, you get paid as a broker, but the remaining 50% you get paid as a lender.
Is an
That's
investor.
usually
Yeah.
the transition for
Yeah.
them to understand the full game, the risk factors, and what happens if someone defaults and things like that, right? And who's a good underwriting team, because some lenders are amazing on retention and collection, while others are amazing at like risk control. So they only approve certain files knowing that they will not default for the most part, right? So all of that, I tell them, like, funding deals and making money, if you just put in the work, it can take a couple of months. But mastering this industry, any kind of mastery, takes time.
Yeah. And so is the workout on defaults generally handled by the lender?
Correct. Yeah.
Yeah.
Yeah, they have the whole process built into their contracts, the follow up, the collection units, or renegotiations, because that's what happened during COVID, for example, right? There were in New York City many merchants who had different funding options, and a lot of our lenders just reached out to the merchants to restructure the deals instead of going the traditional route of collections, because we were having an outlier event. Instead of defaulting, banks probably would have defaulted you, but these are private companies saying that, hey, Arthur, I understand you don't know what's going to happen. Let's restructure this or delay this so it doesn't look like you're defaulting, but how much you can pay and things like that. So it can be a lot more flexible in that sense, in a case like that.
Are you optimistic about, and it's kind of a maybe not a fair question because the answer is probably yes, but you optimistic about your business in terms of growth?
Absolutely. Yeah, for sure. Because we're going to, what is happening is that this happened with the start of COVID, right? We used to get a lot of people who say, I love what you guys do, but honestly, like my job and it's safe. Like I get paid
Right.
and things like that. I think COVID eliminated that sense of safety net a lot. And then now with the talks with AI, and I know a lot of people are, fear mongering. It might not be completely true, but who knows? Probably the number of people who actually knows how this is going to play out is not more than 100. Most of the other people are speculating, but also that adds to the fear, especially from the aging population. Like if you're in your 50s and you really cannot foresee what AI is doing, and you certainly might not have the technical bandwidth to catch up with it, then all you're left with is the fear of what happens, right?
Yeah.
And that creates people for that creates the urgency to look for an opportunity that they can either do it on the side or transition, right? I think that's as a company, that's what we're leveraging. We're not trying to scare people. We're like, hey, anything could happen, we don't know, but what's your plan if it happens? Because at the end of the day, what we do is a good fit for anyone who's hardworking and they want to build something. This is not a get rich quick scheme or anything like that. But it's not going to help you for a couch potato. But if you're concerned about what you need to do and you don't really have a solid plan, it makes sense to look into financial literacy, whether you become a business loan broker, but also understand how finance works, how lending works. Is it better for you to get approved for a bunch of 0% credit cards right now and keep it on the side in case something changes in the next 5 months or so? That's what I urge people to do, whether they work with us or become a business loan broker. Just don't try to demonize debt. I know, like if you listen to Dave Ramsey, he's talking about cutting your credit cards and things like that. That's not a bad advice for the certain segment of the population. But if you consider
It's
yourself
a little bit of
entrepreneurial,
overkill, right?
it's an overkill, right? So if you're entrepreneurial, you also need to be familiarized with how to grow through debt. Like I know many companies who have massive debt, but they also have massive growth, and they know how to balance it. And that comes from understanding how money moves and works, and who it ends up with, and things like that. So I just encourage people to not getting too scared, but also investing in yourself and learn the tools that could help you.
You, you know, thanks for saying that. I've had most of the people in that I'm in their orbit or whatever are pretty savvy about money. But I had an opportunity recently to speak to somebody that really didn't understand money. He was an
Mm,
artist, right? And we were talking about money, and I said, "Well, money's just a tool. You just have to learn how to use it."
yeah.
And they looked at me like I was I had two heads. They go, I never thought about it that way. Right? In fact, that's all it is. It's a tool. And
Yes.
in the case where people have heavy debt in a business, it's because they're using it to advance the the timeline rather than wait to fund it with current revenue. You fund it in
Yeah.
advance of that, and as long as the math works out and whatever you're paying for it is not more than what you'll get, that I mean, it's an oversimplification. It probably makes sense, right?
It does make sense. Yeah, that's usually well, that's it's you might agree with this, Arthur, but the unfortunate thing is many people in the US are college graduates, and then almost no one is trained on how money works, right? So I remember being a biology and chemistry major, I had to take some of the odd classes, and one of them was like macroeconomy and microeconomy. I was studying, I guess, numbers, but it didn't teach me anything about how to save money, how to make more money, how to use debt. Like you would have thought that they would want to prioritize teaching me about credit and funding versus
You
microeconomy and
would
how you use
think.
economy. You would think, right? And learning it from someone who's not actively doing it, someone basically, and no discredit to them, but like when you're, like you said, you're hanging out with people who understand how money works. I would want to learn from those people, but I had to do it privately by paying for masterminds or showing up in rooms and networking environment. I'm not saying you can't do it, but don't expect it from news or some YouTube channels or people in your circle. It's just not existent, right? If you decide to, if your goal is to become at the top 5% or 1% of the economy, economical power, that also means that 95% of people around you have no idea what the heck you're talking about, right? So you have to take it with a grain of, if you want to
They
separate
don't
yourself,
know.
you
They
got to
don't
separate
care.
yourself.
Can't be bothered. I mean,
No.
I've often said that people are really not paying attention to what's going on in the world or in our country, and it's not their fault because they're busy making sure Johnny goes to soccer,
Yes.
getting up and make sure the lunches are made, and making sure that you get to work every day. And after all that, there's not much time to go deep on anything for that matter. So I I, I give a pass to a lot of people that don't
Oh,
know a lot of
100%.
what's going on,
To
right?
your earlier comment, when you say that someone didn't understand when you said money is a tool, I'm not surprised that's the case, because for them money is not a tool, it's an exchange for the hours they sell, right? So like when they almost take it like an insult when you say it. It's like, what do you mean I'm working like 60 hours a week and I get paid, so my worth to my company is measured in the hours that I put in, but you're telling me it's just a tool, right? That's why I think there's a big discrepancy between someone hears someone ultra wealthy talk about money, and then most of the population, they almost get offended because that's not their experience in day-to-day life, right? And this has never been taught that way. And if someone has that habit of about money for the past 30 years, trying to break that overnight is some kind of challenge. Yeah.
Yeah, and there's some case to be made for, look, people get jobs, they take care of their family, they trade their money, their time for money. Everything's cool. Like it can be a very good way to live,
Mm-hmm.
and it's not everybody that can handle a little bit beyond that, right?
I don't think not everyone wants it though, Arthur. Right? What I noticed that since I hang around in entrepreneurial communities, years ago, I noticed I made the mistake of assuming everyone wants that. I think a lot of people don't want that. They
They
just
don't.
want a safe job and they just want to go about their lives and um, live in peace. It's people like you and I who didn't care about living long enough, getting into finances and money, because the game changes, right? So you have a lot more stress. You have to learn a lot more. But I think this broader assumption that everyone wants to be an entrepreneur is just not accurate.
It's not accurate. And I'm older than you are, of course, but even when I was a bit younger, I always felt like my time was far more valuable than what could be traded in dollars, right?
Hmm.
So I didn't want it to be that trade ever, right?
Yeah.
It doesn't make sense, but it's
No.
definitely a perspective that's not ubiquitous for sure. Yeah,
Yeah, but I respect it too. Some people just choose
totally.
that's perfectly fine. That's why I don't like these entrepreneurial gurus trying to make the other rest of the people feel guilty for just maybe wanting to spend some time home, or they don't have those financial ambitious goals. I know we live in the most capitalistic country ever, right? That I understand it is a part of the huge culture, but like these bro shaming, basically, like sometimes I notice I'm like, dude, calm down, man. That's okay. If the guy is happy, the
It's
guy is
totally
happy.
okay. It's totally okay. Well, Oz, I really appreciate you doing this today. It was a really fascinating discussion, and I'm not just saying that. I really,
Thank you. Appreciate it.
really appreciate it. And we'll make sure everybody gets a chance to connect with you if they like, and then share this with the community.
Perfect. Yeah. If they want to look us up, it's businesslendingblueprint.com. Everything is on our website. We have a lot of free resources. My YouTube channel is like 500 videos. You can check it out. Then if you think what we talked about kind of makes sense, you can get in contact and we can kind of take it from there. But Arthur, this has been a pleasure. You're an amazing host. Thanks for having me.
You're very kind. Thanks for the kind words. Appreciate it. Hang on. I'm going to stop this, but hang on there a second. Thank you, everybody, for
Sure.
being here today.